Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hi.
Thank you for joining us today as we are looking at the fundamentals and driving the markets currently. So Peter, how have the markets been behaving?
Well, we made a start with the Asian session today. We had the release of Japan's CPI rates. It should be noted that the CPI rates accelerated beyond market expectations and reached, if I'm correct, a 7 or 6 year high. That could definitely be increasing the pressure on BOJ to start acting in order to tighten its monetary policy at its Thursday meeting. On second note from Australia, would be noting also the release of RBA September meeting minutes. Now the bank in the minutes more or less implied that, or if you prefer, reaffirmed RBA Governor Lowe's comments on Friday that future rate hikes may start shrinking in size. And that did not seem to bode well with Aussie traders. I would also be noting that we had the release during today's European session of Riksbank's interest rate decision. Now the bank took the markets by surprise. It hiked rates by 100 basis points. Rates now in Sweden is at 1.75%, active from tomorrow. And the bank in its accompanying statement more or less stated also that it's going to be continuing to hike rates over the next 6 months. It should be noted that inflation in Sweden is pretty high, reaching over 9% year on year. And that's driving practically the bank into a hawkish stance, more or less creating also some support for the SEK as such.
And how about the US stock markets?
Well, US stock markets were a little bit in the greens yesterday, all three main indexes. That was the Dow Jones, S&P 500 and NASDAQ. It may have been a result of practically market expectations about 100 basis points rate hike by the Fed tomorrow easing somewhat. It's characteristic that Fed funds futures imply a lesser probability for such a scenario to materialize than, say, for example, on last Wednesday, when on Tuesday we had the release of the US CPI rates for August, which showed that inflationary pressures were still high. I would note though also that we had US yields which were on the rise. It was characteristic that the 10-year yield reached an 11-year high, more or less could be supporting the US dollar, could weaken US stock markets and especially could weaken gold's price. Yet should the market's expectations about the Fed's hawkish stance continue to ease, we may see US stock markets continuing to be in the greens today as well.
And what's on the calendar for today?
Well, we already mentioned the Riksbank's interest rate decision. The Riksbank's governor is going to be holding a press conference, it should be about now. And in the American session, we have from the US the number of house starts. And from Canada, we would be highlighting the CPI rates for August. Should there be a substantial acceleration of the CPI rates, even a tick up, that could provide some support for the loonie, given that it would increase the pressure on BOC to tighten its monetary policy at a faster pace. It should be noted that since the beginning of the year, BOC has hiked rates. It was at 0.25%. It's currently at 3.25% and is expected to rise further. So we may see the bank maintaining its jumbo rate hike approach, let's say, in order to curb inflationary pressures within the Canadian economy. Should, on the other hand, the inflationary pressures ease, in the case of a deceleration of the CPI rates, we may see the loonie weakening, as that would ease also the pressure on BOC and would allow it practically to start shrinking the size of rate hikes. Now, in the late American session, I would also be noting for oil traders the release of the weekly AP crude oil inventories figure. We had an increase of inventories in the US last week from AP reported of around 6 million barrels. Now, should there be another increase, maybe even higher than the 6 million barrels indicated in the last report, that could weaken oil prices. And the main reason why is that would imply practically that demand was not able to reach production levels. So practically a slack would be created within the US oil market, which could drive oil prices even lower. On the other hand, for a possible bullish effect on oil prices, we would require drawdown. A mere reduction of the increase may not be sufficient. Last but not least, on the monetary front, I would be noting that we have two ECB policymakers speaking in the American session today. That would be the ECB President Christine Lagarde and board member McCall, which, should they sound hawkish enough, may provide some support for the euro. On the other hand, though, let's not forget that the ECB president may try to ease market worries about the bank's intentions, and in which case we may see her hesitating, more or less weakening thus the euro. In the Asian session tomorrow, we also note RBA Assistant Governor Bullock.
Any final comments, Peter?
Well, it's an interesting day in the sense that everything seems to be revolving around the Fed's interest rate decision tomorrow. And practically the market's expectations, given that we have also a low number of high-impact financial releases from the US, I think it's expected to be maintained, and most probably the market sentiment will continue to revolve around those expectations about the Fed's intentions, not only in the interest rate decision as such, but also regarding the new dot plot, the economic projections. Are they going to show a recession or not? If so, how deep? And also about the bank's intentions about future rate hikes.
Great. Thank you, Peter, for your time.
Yeah.
And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation for today. In front of your screens you have the US dollar index 4-hour chart, and overall all charts to be shown are to be in the 4-hour time frame unless otherwise stated. Now we have the US dollar index, which tends to remain in a sideways motion, as we had mentioned yesterday, between the 109 and the 109.90. Overall, though, we have to note that the levels of the US dollar index are pretty high, and it's interesting if we drill out of the 4-hour chart to the daily chart, you can see all the ascent which the price action has had, actually marking an upward motion like this. But note that we have a lower peak here. If we drill even out to the weekly chart, we see that it's a record high, and that goes even wider if we go to the monthly chart. Practically since 2014 then onwards, it's a 20-year high. Drilling back into the 4-hour chart, so we tend to maintain our bias for a sideways movement of the index between the 109.90 and the 109. At this point it would be interesting also to add the Bollinger Bands in order to see how exactly the price action has stabilized. And it's characteristic that the Bollinger Bands see the 20 moving average, which was on the rise, actually crossing above the 100 moving average here, rising, yet at this point stabilized and maintained in a sideways motion. At the same time, note how the upper Bollinger Band and the lower Bollinger Band converged, implying a decrease of volatility for the pair, for the index. Note also that the RSI indicator seems to be revolving around the reading of 50, yet not distancing pretty much. So it's currently at, let's have a look, at 54.7, pretty close to the middle level. So more or less all of that tend to imply that the pair seems to remain in a sideways motion for now. Mind you though that should we see a buying interest on behalf of the market ahead of the Fed's interest rate decision, we may see the price action actually breaking the 109.90 resistance line. See how it provides resistance here, here, tested here again, and again. So it's pretty valid. And in which case, should the R1 be broken, we tend to highlight the 110.75 as the next possible target for the bulls. It would be interesting to note that the level could be narrowed a little bit. On the other hand, should the bears take over, we may see the price action dropping, breaking the 109 support line, and start actively aiming for the 107.65. At this point, I would like to narrow a little bit this resistance line. We would place it at 110.50 in order to catch exactly this peak here. The price action though, despite low volatility, seems to be easily covering 90 ticks, so mere 60 ticks may not be enough to cover the bulls. So the bulls may break the 109.90 and break also the 110.50, creating a new high. Okay, let's have a look now at Euro USD. Euro USD, which seems to have had some bullish tendencies. It will be clearer to see in the daily chart, in the 1 hour chart, which has more details. See how the pair was on the rise yesterday. That was practically until the late American session. Yet during today's European session corrects steeply lower. Nevertheless, for the time being, we're drilling back out to the 4 hour chart, and we're correcting definitely the resistance line, which has been broken, to the support line. That would be the parallel level, 0.98. Let's go hunting for a new resistance line being placed. I will be placing it on this peak here. Let's have a look. There was some testing. It seems to be pretty valid. I'm keeping it. And that would be, ladies and gentlemen, the 1.02885. Let's color it in red in order to reflect the fact that it's a resistance line. Let's also correct the labels. So, for the time being, we tend to maintain our bias for sideways movement. Telling you the truth, I wouldn't be surprised to see the price action continuing to revolve around the parallel level for Euro USD. Most probably, we may see the price action diving just below it once again, bug up and continue in that manner. But definitely the release of the Fed's interest rate decision tomorrow could alter the pair's direction to either way. Also, there seems to be some support being provided at the S1 parallel level. It's more clear if we drill down to the 1 hour chart. Note the touch here. It was about 1 hour ago. On the other hand, the RSI indicator remains near the reading of 50. Actually, it runs along the reading of 50. And that could be implying some indecisiveness on behalf of the market. On the other hand, though, we have to note that the RSI indicator has marked higher lows and higher peaks. And that could be implying that we may be seeing some slight bullish tendencies being built for Euro USD. Should the bulls actually take charge and for us to switch our bias for sideways movement in favor of a bullish outlook, we would require a clear breaking of the 10095 resistance line, which provided resistance here and support here. While on the other hand, should the bears take over, I would expect the price action to break the S1 parallel level, possibly also break the 0.99 support line in order to form a lower trough below these levels here. Okay, let's have a look at cable. Cable, which seems to have some signs of stabilization. Let's delete the past trend line. And that's interestingly enough, given that we had a low, steep downward motion, yet the pair seems to have stabilized just below the 1.1450 resistance line. We tend to maintain a bias for a sideways motion, albeit I wouldn't be surprised to see the bears regaining control over the pair once again. Should the pair stabilize, I would expect it, given that it seems to have be finding some resistance at the 1.1450 level. I would expect it to maintain the sideways motion between the 1.1450 and the 1.13. The R1 and the S1. On the other hand, should the bears take over, we may see the price action dropping. Definitely we would require clear breaking of the 1.13 and start aiming for the 1.1150. On the other hand, should the bulls take over, we may see the price action rising, breaking the 1.1450 and start aiming for the 1.1605. I would note that that's interestingly enough that the downward motion of the Bollinger Band seems to be continuing, once again implying that there are still some bearish tendencies within the pair. The RSI indicator, on the other hand, seems to be stabilizing, but just below the reading, it's below the reading of 50, it's 43. It's a so-so situation. For the time being though, we maintain our bias for sideways movement of cable between the 1.1450 resistance line and the 1.13 support line. Let me reiterate that for a bearish outlook, we would require a clear breaking of the 1.13 and the price action to start aiming for the 1.1150, while for a more, if you prefer, a bullish outlook, we would require a clear breaking of the 1.1450 and the price action to aim or even test the 1.1605 resistance line. Okay, let's have a look at USD/JPY. USD/JPY, which remains largely in a sideways movement, albeit we have to note here that the yen seems to be weakening just a bit in today's European session. I would be interested to see what the market action was for the pair at the release of Japan's CPI reads. Give me a sec. Let's have a look. And it was at 2:30. Let's drill down to the 1 minute chart. Widening the spectrum. Nice upward motion in the minute chart. And let's go back to see at 2:30 what the price action actually was. So we had a slight, this is it. There was a slight rise followed by a steep drop of the pair around 2:30 to 2:40 in the next 10 minutes. Half an hour, sorry. So there wasn't substantial market reaction at the time of the release. Okay. For the time being though, I would be correcting the level and turning it into support line, with the next one being placed at 146 and 80. Sorry, 148 and 80. Could go higher, 149. Nevertheless, the pair is already at very high levels, and the possibility of a market intervention should not be underestimated. But even a market intervention, I would sincerely doubt if it would have any meaning if, in the long term, if BOJ actually maintains this dovish stance as that would continue to weaken practically the yen. So here you go. I've corrected the labels, not all of them. This one is still missing out. 145. That's it. Now we have a price action which tends to maintain a sideways movement, practically revolving around the 143.50 support line currently. We tend to maintain our bias for a sideways movement to be maintained. Note how tight the range bound movement actually is, and it's characteristic that the Bollinger Bands have converged, reflecting the lower volatility even further. So we tend to maintain that view. On the other hand, note that the RSI indicator has started to rise, which may imply that some bullish tendencies within the market sentiment have started to being built, foreshadowing a possible strengthening of the US dollar, weakening of JPY, or if you prefer, reflecting the latest price action of the pair, a slight rise. Should the bulls take over, or if you prefer for a bullish outlook, we would require a clear breaking of the 145. The price action has to rise, break the 145, and definitely create a higher peak than the one here and here, which practically stopped short of the 145 resistance line. On the other hand, should we have a bearish movement, we wouldn't just be satisfied with the breaking of the S143.50. That's happening all the time for the past 2 days. That's not a problem. The issue would be generated should the market action break the 143.50, but also break the 141.50 in order to create a lower trough than here and here. Start aiming for the 138.85. So practically the pair seems to be maintaining its sideways movement for now. Once again, let's have a look at the other commodity currency, that would be USD CHF. Oh, that's nice. Now we have a development here. I had mentioned the possibility of USD CHF stabilizing yesterday, and it seems that it did. It's characteristic that the upward trend line seems to have been broken, unless there was just a slight shift to the right, which would also be interesting. Let's have a look. Now shifting the upward trend line. No. Now we have two conflicting forces here, and I think the picture would be superior if we would drill down to the 1 hour chart. There we go. See how the price action is testing in the European session the upward trend line, implying the stabilization of the pair. Should the bulls regain control over the pair, we're back in the 4 hour chart, I would expect it to rise, break the 0.97 resistance line, and start aiming for 0.9765. On the contrary, in general, I would expect the pair to have a higher peak than this one for me, in order for a bullish, or the basis for a bullish scenario to occur. Without the breaking of the 0.97, I don't see the bulls taking charge. Should there be a stabilization, or should the stabilization be extended, we would expect the price action of USD CHF clearly breaking the upward trend line and remaining between the 0.97 and the 0.9610. On the other hand, should the bears take over, we may see the price action dropping definitely breaking the upward trend line, the first sign of a trend reversal. Yet we would also require the price action to break the 0.9610 and start aiming for 0.9480. It's interesting how the pair has started to lower its volatility. On the other hand, we have to note here that the Bollinger Bands are clearly having an upward slope, all three of them, including the mid-level of the 20 moving average, which is about to meet the 200 and 100 moving averages. The RSI indicator below our 4-hour chart is practically at 57. Slightly bullish, but not convincing enough. So for the time being, we tend to maintain the bias for a sideways movement to continue between the R1 and the S1. Mind you though, a small note of warning, there may be some bullish tendencies for the pair. Let's have a look at commodity currency AUD against the US dollar. Okay, once again a similar picture, yet we would have to correct this one and reverse the 0.67 resistance line into support line. Overall, the sideways movement seems to be continuing. In red, a new resistance line at 0.69. Let's go through the labels. The second support line is now being placed at 0.6645. There we go. And the final support line being placed at 0.6585. Let's have a look. Yep. Okay, everything is in place now, and we tend to maintain a bias for a sideways movement of the pair, continuing to revolve its price action around the 0.67 support line. So I wouldn't be surprised, given also the bearish tendencies, to see the price action dropping below it, yet at some point correcting higher and jumping above it. That would be placing practically the next level here as a support line, a mid level at 0.6670. The RSI indicator, on the other hand, seems to have a downward slope. On the other hand, though, tends to create higher throws and higher peaks. I would be keeping the sideways motion bias. Should there be though a clear bearish movement for the pair, I would expect it to drop, definitely break the 0.67, which is currently being tested, but also break the 0.6645 and start aiming for the 0.6585. On the other hand, should the bullish scenario occur, I would expect the price action to reach, if not even breach, actually breach the 0.6770 and start aiming for the 0.6835. For the time being though, I tend to maintain a bias for sideways movement, yet with the advice of the Bollinger Bands, you may see some bearish tendencies being built. Okay, let's have a look now at USD CAD. USD CAD, which has also dropped and corrected. So we see a stabilization of the other commodity currency at around 1.2950. Sorry. So for the time being, we see the price action moving in a sideways manner, and we switch our bullish outlook given that the upward trend line has been broken. The bias for sideways movement is to be contained between the 1.3205 support line and the 1.3350 resistance line. Should the bulls take over, I wouldn't be surprised to see price action rising, breaking above the R1 and start aiming for the R2 1.3490. On the other hand, should the bears take over, I wouldn't be surprised to see the price action dropping, breaking the 1.3205 and start aiming for the 1.3075. On the other hand, note that there is a nice upward slope on behalf of the Bollinger Bands, yet the upper Bollinger Band seems to have started to stabilize, reflecting the drop here. The RSI indicator has dropped considerably, aiming for the reading of 50, yet corrected a little bit higher. It's currently at 61, which may imply that there are still some bullish tendencies within the pair. For the time being though, I would require clear breaking of the 1.3350 resistance line in order to switch my bias for sideways motion once again in favor of the bullish outlook. For the time being, once again, we expect the sideways motion to be continued between the 1.3350 and the 1.3205 support line. Okay, let's have a look now at gold. This is gold's 1 hour chart. Let's roll back to the 4 hour chart. It's practically a fresh chart as you have requested in your messages. Let's do this from scratch. Setting support line here. Have a nice show here. And let's find the second support line. Let's move to the daily chart. Weekly. Back to the daily. 4 hours. Okay, we're going to have to make do with the daily chart. I would be also noting this peak here. Let's also have a look at the resistance lines before we move on. Another one could be placed somewhere here, a little bit higher, practically based here and here. Okay, let's have a look at the resistance lines as well. First resistance line definitely to be placed here. Triple peak. And that would be the 1680. Let's drill back into the 4-hour chart. We have another peak. And another peak. And I would also be noting one peak here. Keeping the last two, leaving the previous one, drilling wide in the chart, adjusting once again, and we have the 1680 as the first resistance line. As second resistance line, we have the 1705. $1706. And the final, give me a sec. Final resistance line is now being placed at 1735. There we go. Let's also have a look at the support lines. Making a start with the 1630, sorry 50. Mean, okay. 51. Second support line being placed at 1632. And final support line being placed at 1610. So let's have a look at the direction now. There's a downward motion here. Another downward motion here. third downward motion here. So we have overall a wide downward motion like this. Note that we have consecutive higher, lower peaks and lower trows being formed. For the time being though, we have a stabilization of the precious metal, and it would be interesting to see how also the Bollinger Bands have reacted to the stabilization. Indicators, trend, Bollinger Bands, there we are. Okay. Note how the price action dropped, hit the Bollinger Band, the low Bollinger Band, and stabilized. It's actually meeting right now the 20 moving average. It's a steep downward movement, implying that the bears may not be over yet. For the time being though, I tend to maintain a bias for a sideways movement, given that the price action has broken the downward trend line, which has been guiding the precious metal from around the 13th of September up until the 16th on Friday when it was broken. Should the stabilization remain, we may see the price action remaining between the 1680 and the 1651. In case the bulls take over, we may see the price action slowly rising, breaking the 1680 and start actively aiming 1706. Actually, definitely a break of the 1680 would be a prerequisite for a bullish outlook for gold's price. On the other hand, a prerequisite for gold's bearish scenario would be to see the price action dropping, breaking the 1651, which was providing support here, and start actively aiming for 1632 support line. I would like you to note though, the downward motion of the Bollinger Band. Also note how the reversal of the direction of the lower Bollinger Band has marked the stabilization of the pair. The RSI indicator, on the other hand, has a downward slope, implying that the bears are still not over. It's currently at the reading of 38, which could be signaling some bearish tendencies here. So overall, for the time being, we tend to maintain a bias for a sideways movement between the 1680 and the 1651. That should be it from all of us here at IronFX. Best wishes for solid trading.
Hello, my name is Christina, and today we will talk about IronFX's VIP room. As part of IronFX's commitment to delivering educational content to support its growing trading community, we have created the VIP room. With our VIP trading room, you can access market insights, request market analysis, and ask our analysts questions in real time. The VIP room will give access to exclusive trading insights and personalized support delivered from award-winning analysts with years of experience in the Forex industry. By becoming an IronFX VIP, you will be able to benefit from interactive institutional-grade market forecasts. Each forecast comes with a dedicated discussion panel, so you can ask the analysts your questions. This brings us to our next benefit, which is the ability to communicate with our experts and ask them your questions. You can use our interactive charts to ask any questions you have on the markets. With our collaborative charts, you can watch our experts in real time and you can get clearer explanations of your analysis, where you can link the words you write with your chart objects, so everybody knows what you're referring to. Great communication means better understanding and better informed trading decisions. Our experts go above and beyond to help you shed more light on complex analysis and gain deeper knowledge on particular instruments. With the VIP room, you have the ability to request market forecasts and ask an expert to take a look at any instrument for you. If this sounds interesting, here's how to access the service. We offer 5 tailored account types and you can choose which one suits you best. The first one is the bronze, which you can access with a minimum deposit of $250. The second one is the silver, which you can access with a minimum deposit of $1,000. The third one is the gold, which you can access with a minimum deposit of $2,000. The fourth account is called platinum, and you can access by depositing at least $5,000. Finally, the diamond is available with a minimum deposit of $15,000. The diamond provides exclusive support, which weekly calls the ability to have direct communication with prop traders and ask questions, as well as communicate with the chief trader and a lot more. If you want to gain access to our VIP trading room, simply apply for a VIP room membership and deposit the relevant minimum amount. Thank you for watching.
In today's session, what we're going to be doing is we're going to be doing our strategy clinic, right? So if you have questions on your trading strategy, which you'd like me to diagnose, right? Maybe you have a moving average crossover strategy, or you have a strategy on Fibonacci, Elliott wave, right? In today's session, you get to ask me all the different, you get to share with me, right, the trading strategy that I have, and I can give you my professional perspective on it. All right, guys. Now, before we begin, a quick disclaimer that everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. All right, so please do your own little due diligence before you guys trade. Okay. Now, let's begin. Let's begin today's session. All right, let's begin today's session. If you have any requests, right, let me know too. All right, just a quick introduction of myself. My name is Desmond Leong. I run the award-winning research firm Everest Fortune Group and also the Forex Army. So we are finalists for the best FX research and best equity research in 2019, 2020, and 2021. So we usually have a strong team of traders advising the banks, the brokers, the hedge funds on where the markets are heading. But we have a special partnership with IronFX where we are bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. All right. So yeah, in today's session, right, there are only 2 things that we want to do, right? The first one is diagnosing your trading strategy. So if you have a trading strategy you want me to look at, let me know, right? I'll do my best to look at it, right? And if otherwise, right, I will, while you guys are sharing your trading strategy with me, right, I'll also be looking at some trading setups that we can look at together. Okay. Now, let's begin today's session. Okay. Moving on to the charts. Okay, so I'm going to disable my video first because when looking at charts, I'm not sure how the video is, but maybe you should be able to see more of the charts if I hide my video. All right. Okay, let's go. Now, remove some drawings. Now, let's begin today's session. So usually when I trade, right, I'll just be sharing with you guys the approach I take to trading, right? So I usually have I use TradingView, right? I use TradingView to do most of my analysis, right? And I have a watch list by the side over here, right? So the watch list, I have my analysis, I got futures, I got my crypto list, I got a market watch, right? So market watch is where I see most of my Yeah, Market Watch is where I see most of my all the different. You notice there's all the different majors, right? There's a little bit of the main cryptos I'm looking at, right? In the indices, right? I got pound, the euro, the Aussie crosses. I got a whole bunch of them by the side. Okay, so this is where I usually scroll through my the different instruments, and I see if there are any trading opportunities there. Right. So let's begin. All right, let's begin. So maybe for starters, right, I usually start the day by looking at something like maybe dollar CAD. Right. So how I usually analyze the trades is I tend to take most of my trades on the 1-day chart and the 4-hour chart, right? Mainly on the 4-hour chart. But what I do is I actually go onto the 1-day chart to look at the higher time frame to see if I'm missing anything out, right? So as you can see, right, if I look at the 4-hour chart, this is telling me one picture, but I will go into the 1-day chart, right, and then I will zoom out, and I'll have a better picture on what is I have a better picture on what to expect, because I got a higher time frame over here. Okay. Now the important thing to take note of is that when you're trading, you don't need to, what's the word for it? You don't need to take every single trade that you're doing an analysis on. Sometimes when you're looking at a market and you're just looking at it over here and you realize that, man, there is really nothing nice to trade in this market. If there's nothing nice, it's perfectly fine. Move on to the next market. Okay. Now, I can see a couple of new guys are streaming in, right? Like Sahid, right? Temitopi, right? Foibe, right? Guys, if you have requests, if you want me to look at any specific instrument, right? We got Kelvin tuning into, right? If you guys want me to look at any specific trading instrument, right? Or you like euro, dollar, gold, or Bitcoin, let me know. Right? Or if you have a particular trading strategy that you like my opinion on, right? You can let me know too, right? And I can share with you my opinion on these trading strategies, right? I've diagnosed many trading strategies in the past, right? I've created many profitable trading strategies. So if you want my opinion on them, now's the best time. Okay. So all right. So like when I'm looking at something like dollar CAD, right, I noticed that there's a lot of fluctuations, right? A lot of fluctuations in between here. In between that, I realized there's not really many trading opportunities for me over here, right? At most, I do notice that there might be a little bit of a channel, but price is mainly in the middle of nowhere. Very few clear trading opportunities for me to trade, right? But the important thing is that I notice if there is no opportunity, you just move to the next one. Now, this is one where there might be opportunity. Okay. So what I like about this, right? So if you're looking at the 4-hour chart, right, you might be looking at it and thinking that, oh man, right? Hey, Natalia, right? Nice to see you tune in, right? I'm not sure if you got your VIP room access already. But if you haven't, let me know, right? I think there was some registration problem previously, but it should be working now, right? But yeah, so if you're looking at a smaller time and you're looking at a 4-hour chart, you're just looking at prices go down, and you think that, oh man, it looks like price has broken a key level of support over here. You're expecting it to kind of go down further, right? So, okay, that's nice, Natalia, right? The VIP room will be a lot more active soon, maybe from next week onwards, because we are just finalizing the last bit of the nitty-gritty stuff, right? On getting it set up. Yeah, but it should be much more active from next week onwards. Now, so the thing with when you're analyzing a chart, okay, guys. So I see a couple of new people streaming in, right? In today's strategy clinic, I'm just going to share with you guys real quick. In today's strategy clinic, we are basically diagnosing your strategy and looking at trade setups. So if you have okay, I can see some questions coming through. All right, if you have a specific kind of trading strategy you'd like me to take a look at, just send it through. I'll do my best to look at it. Okay. Sahid is asking, what is the requirement for the VIP room? The requirement for the VIP room, right, is if I'm not wrong now, they just raised the bar. So as long as you have a $250 live account with IronFX, you can get access to it, right? So you need to go to VIP. vip.ironfx.com, right? So this is the link that I'm going to send to you, vip.ironfx.com. Once you go there, you can register for a new account, right? And then you get access to this VIP room over here, right? I think where's Natalia, right? But yeah, come in here, you have access to all the different instruments by the side. And this is where, you can come in here and you can practice your analysis, right? So like over here, you might be thinking, you come down here and enjoy this support line and you can say, hey, hey, Desmond, do you think price might bounce from this support? What support level are you referring to? You highlight the text, click this button, link object to text, and you can select the object that you just drew, right? So what happens when you send a message through is that you can see it over here. When I read your message, I can hover my mouse over it and I can see, oh, this was a support line that you're referring to, right? So that gives me better context to what you're doing. It's a great place where you can practice your trend line, you can practice your stochastic, you can practice your channels, your support, your Fibonacci, your harmonics. You can practice anything. And anytime you want me to take a look at something, you just mention me, right? Or can mention the other group of prop traders that we have, and we can attend to your question right away. Okay. So all you need to do, of course, you go to vip.ironfx.com, register a new account, and if you have at least $250 in your account, right, all you need to do is to click on this thing called request access, right, and upload proof of your live IronFX account to get full access. So you just need to take a screenshot of your live account with $250 inside, and I will approve it, right? So yeah, you just need to click on this button here, request access. Okay, I think we don't have just let me check. Yeah, so we have actually 2 request access. So like Natalia over here, right? Like to gain access to the VIP room, and she has attached the proof of account size, right? I'm not going to view the whole thing, right? I can see it's over there, right? So it's enough. I will click accept, right? So I'm going to give Natalia a silver tier, right? Done. Natalia, you should have access to all the different channels by the side. I can see this guy, Carlitos, can I have access? He also wants access to it. I can see maybe he has a little bit of, he sent me a screenshot. Maybe there's an error of the screenshot, right? But if he, I'll go check it with him later. But in this case, we give him the silver tier access and he will have access to the rest of the trading room, okay? So take advantage of this opportunity and join the VIP room, right? Because it used to be free, but IronFX have just changed the deposit requirement to $250. They might be increasing it over time. So if you have an IronFX account, please just go and what's the word for it? Register for it. Okay, I think go get your spot. Once you have registered for it, though, you can actually drop me an email, delong@notesco.com. I think this is the email. I'll check the email later, but you can just drop me an email, drop me a message, and I will ensure that your approval is expedited. Okay. A couple of new people coming in. That's great. All right. Temitopi is asking, wouldn't mind some explanation on FVG and order block. Okay, I understand the meaning of order block, but what do you mean by FVG? What is there a short form for something? Yeah, maybe if you let me know, I can dig a little bit deeper into it. Okay. Now let me explain order block in a minute. Okay, guys. So the thing when you're analyzing a chart, right? When you're analyzing a chart, you need to take note that when you're looking at just at a 4-hour time frame, or are you looking at any time frame, a good habit to do is just to go one time frame higher. Go one time frame higher. So I'm at the 4 hours now. I'm going to the 1 day. Once I go to the 1 day, right? Then I might be thinking, okay, I'm expecting prices to drop further from here, or fair value gap. But I'm expecting prices to drop further from here. However, if you scroll further back, you'll notice that there is a major support level right over here, right? Major support level over here, right? Price had bounced from this level 1 time previously, 2 times previously. So it's close enough to that level where, you know, we could be expecting prices to kind of bounce up from there. Okay, so this is the important thing with on why it's important to look at a higher time frame, because we might have been thinking that we're going to just wait for prices to drop down on dollar franc, but if you look at the higher time frame, then you realize that, whoa, you know, there is a major support level that goes back to even, well, the last time price was at this level was at what, July 2020, so it's about 2 years ago, right? So last time price actually tested this level was 2 years ago. So it's a very, very strong level. It might be dangerous for us to try to play the move beyond this level. So instead of trying to go short, so, you know, if I was on the 4-hour chart, I was thinking, yeah, you know, price maybe breaks this level, I expect it to go down, right? But then you suddenly realize that it's a little bit hard for you to play the drop all the way down, because there's such a strong support level over here that, you know, it will make more sense to play the bounce from here. Okay, so yeah, this is one of the considerations that when you're trading, you know, don't just look at one time frame, look at the time frame which you're going to take your trade on, and then go one time frame higher and see if you happen to miss out any of these trades, right? Do you miss out like a super big support level that goes all the way back for the past 10 years, right? Or something like that. Okay, now guys, let's move on from here. Just give me a second. Okay. Okay, let's move on from here. Just anyway, regarding this particular analysis on dollar franc, right? Because I do want to explain it a little bit more. Before I move on to the next pair, right? This analysis, after I highlight my key support and resistance levels. Okay, so in this case, I have a key support level here. I then would do this thing called a Fibonacci projection. Right, this Fibonacci projection, I use 61, 78, and 100. So what you always tend to notice is that the 100% Fibonacci projection is pretty handy. Even the 78 was great. You notice how price touched the 78 and then bounce up a bit, bounce up. Price touched the 100, it bounce up, touch the 100, it bounce up. So these are what we call Fibonacci projection levels. If you know how to use them accurately, they are very, very effective in being able to call little reversals. They are one of the only, right? They are one of the only leading indicators out there. So, you know, in trading, sometimes we have lagging indicators, sometimes we have leading indicators. So what are lagging indicators? Lagging indicators, right? Lagging indicators are stuff like your moving average, right? Your moving average is usually a lagging indicator. Your stochastic is a lagging indicator. Your RSI is a lagging indicator. Even Bollinger Bands are lagging indicators. Many of these are lagging indicators, right? That means they require price to move first. Only when price moves, then it moves along, right? So this is what I mean by lagging indicators. So they are usually one step behind the market, right? Moving averages are one step behind the market because you require the market to move first, right? You require the market to move first before you move. So then again, it leads to the next question. What are leading indicators? Leading indicators are things that forecast, what's the word for it? They get to forecast price in advance before it even happens, right? So for example, in this case, a leading indicator like Fibonacci, what it does is that it forecasts at 100% projections over here. So it's forecasting that price will come down, touch the 100% and make a small bounce, right? So we can see, you know, when it comes down, it touches the 100% and that's a small little bounce from here. Okay, you can see that it touches, then it bounces, right? So that is what a leading indicator does. In trading, it is important that you have a combination. You have a combination of lagging indicators and leading indicators, and so there are three kinds, right? There is I told you there's lagging, there is leading, and then there is right in the middle, Right in the middle is what you call price action. Price action, meaning this is when in the thick of the action, when things are happening. This is things in the past. These are things in the future. Okay. So in this example, right? So if I were to give you an example, lagging indicator could be a moving average, right? So maybe you have a moving average that is like support over here, right? You have a long moving average that is like support. So this is one reason why it might bounce. Okay. Then you have a leading indicator. A leading indicator like a Fibonacci projection, right? It projects that this 100% might be a level where price might bounce off. So we got lagging and we got leading. What about price action? Price action is maybe when price just touches this level. You look at this. We have this kind of different kind of price actions. I know it's a little bit hard to see. That's why I'm going to come in here. I'm going to remove all my brushes, right? So maybe when you reach over here, right, what you then notice is that there's this price action over here. There's a bullish engulfing candle over here, right? There's a long wick rejection over here, right? So these are things that it forms the third part of the puzzle, right? You got lagging, you got leading, and you got, the past, basically the past, the present, and the future. When you combine all three of it together, you get a very high probability trading setups, but you must combine the right things. All right. So in this case, Fibonacci's are a leading indicator. It forecasts 100% over here, right? At the same time, we got support and resistance. You can see a very, very nice support in the past over here. And then, of course, we have, let's see. I think that is most of the, that's most of the reasons why we think price is going to go up. I think there's a short-term channel breakout. There might have been a short-term channel breakout somewhere about here. Right, you can see price was going lower. Price was going, oh, sorry. You can see price was going lower in this channel and finally broke out from there. So you now have a couple of reasons, right? You have 100% Fibonacci projection. You got a nice channel breakout. You got, you got one here. We got two here. We got a nice support level over here, right? Three reasons why price might bounce up, right? And we throw an indicator, maybe look at the stochastic. Stochastic, I like to use 21, is it a 5.3? Or is it 34.53? There are some numbers that work better than the others, right? Stochastic, nice bit of stochastic that is turning upwards, right? We can see stochastic slowly going upwards. So there's a lot of upside potential, right? So this then shows me that how I got 1, 2, 3, and maybe 4 reasons why price might go up, right? If you look at it, there is bullish divergence. Stochastic is making lower highs, right? Price is making, right, lower lows, and lower lows, right? So there's bullish divergence here, right? So now you got 1, 2, 3, 4, 5 reasons why price is going to go up. So when it comes to trading, this is basically all there is to it, right? You need to try to find more reasons why price is going in the direction that you expect it to go than the reasons against it, right? So in this example, I have so many reasons why price might be bouncing up, right? I got a nice 100% Fibonacci projection. I got a nice channel breakout over here, right? I got a nice super long support that goes back for the past 2 years. I got stochastic that is bouncing upwards, and I got a bullish divergence that is that's showing that price is going, is likely going to make a bounce. So when you combine all of this together, this is what we call a high probability setup, HPS, right? A high probability setup. You are combining this is a leading indicator. This is chart patterns. This is these are called indicators, right? We're combining divergence. We're combining support and resistance, right? And we're combining an oscillator. So you combine all the different kinds of studies, right? Just to give yourself the highest chance of being correct, right? So the reason why we combine different studies is that we cannot be biased. Right? What I mean by that is that sometimes a mistake that most people tend to do, right, is that they load too many indicators that belong from the same family. Now, what do I mean by that? Right? So they might load an indicator like the Stochastic, they load the RSI, they load the MACD. Did I load the MACD? MACD, right? Yeah, so these are all oscillators, right? And then you look at it and you say that, all right, RSI looks like it's going upwards, right? MACD looks like it's going upwards, it's going to cross, right? So all of these are essentially oscillators. So they are telling you the same story, right? So this one says yes, this one says yes, this one says yes, it's going upwards. If you are not careful, you will have, you will treat this as three separate ticks, right? You will treat it as three separate ticks, and then you'll be very confident. But the danger is that the RSI might be just telling the same story of the stochastic. The MACD might be telling the same story as the RSI and the stochastic. So they're all actually telling you the same thing, right? But just from just different forms of oscillators. So one tip that I have is that if you find yourself doing this, please don't do it, right? Try to combine different studies of analysis, right? So if you have one oscillator, that is enough. Having one oscillator most of the time is enough. Then you look at support and resistance levels. Then you look at trend lines and channels, right? Then you look at Fibonacci. Then you look at Ichimoku, right? After you look at Ichimoku, then you look at maybe divergence, right? So you combine different things to really give yourself the best chance of being profitable on a trade. Now, Temitope, fair value gap, I roughly understand what fair value gap is. I will need to dig a little bit more into it, right? I roughly understand it's more something similar to demand and supply zones, like price tends to reverse to fill up the fair value gap or something, right? I'll need to do a little bit more research into that to give you a proper answer. But I believe it based on what my initial understanding of it, yeah, fair value gaps is basically like a different version of supply and demand, right? So there is a lot of there are reasons why it will work. Okay. I will, however, now move on to the next part, right? I will now move on to guys, right? Got a whole bunch of you guys here. If you want me to look at any instrument, let me know, right? So I will just pull it up and I'll just look at it. Okay, I'll do an analysis on it, and you can watch me analyze the chart and maybe look at find some trading opportunities. In this case, we're expecting dollar franc to go up. So if it goes up, that's great. Okay. Now let's look at other stuff, right? Okay, one of the instruments that I was watching is actually Kiwi dollar. Okay, what do I like about Kiwi dollar is that it is very strong bearish momentum. I think there might be a bit of a channel. Tweak it a bit. Bearish channel. So you firstly have a bearish channel on Aussie dollar. Okay. Okay, Sahid, if there's a particular indicator that you want me to teach, let me know, right? Some of it are a little bit more advanced, some of it are a little bit more straightforward. But if there's a particular indicator which you want me to explain a little bit more on, let me know. Or otherwise, I will try my best to explain it along the way. All right. So this thing is called a channel, right? This thing is called a channel, right? And a bearish channel means that prices are going down, right? So bearish channel means that prices are going lower, 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 lower. You're expecting prices to kind of go down, okay? Bullish channels are the opposite, right? Bullish channels, you're expecting prices to go up. It's usually green in color, okay? Now, this bearish channel. So first thing we establish, number one reason, right, why price might go down is bearish channel, right? Bearish channel, I'm going to call it BC, bearish channel. The second reason, throw up the Ichimoku. So the Ichimoku, so I use the Ichimoku in a slightly different way, right? The Ichimoku Kinko Hyo is actually Japanese for charts at a glance, right? The original indicator is actually very, very complicated, right? You look at it, there's so many things there, right? So they have lagging span, the Chico span, right? You got all this different stuff. but I feel that it's a little bit overwhelming. So what I like to do, one of the most effective tools of the Ichimoku is actually, once you disable everything, is the cloud. It's the Ichimoku cloud. You can see there's a nice little cloud over here. The cloud means something simple. If price is below the cloud, it means that there tends to be bearishness. If price is above the cloud, right? If price is above the cloud, you tend to see a little bit of bullishness. That means price tends to go up a little bit more. Now, this is not guaranteed, right? Rather, this is just one of the reasons. This is just one interpretation, right? So in this case, I got Ichimoku, I got bearish, right? The third reason is that now looking at this, and I see that there's a nice descending resistance line pushing prices down. And if I go down under the smaller time frame, there's also another, you can see that price is being squeezed down here, right? On what I like is on the smaller time frame, you notice that we're on the 4-hour chart now. On the 4-hour chart, price is below Ichimoku, right? On the 1-day chart, price is also below Ichimoku. So this works on both time frames, which is great for me, right? It means that they're both, we're seeing bearishness on the higher time frame and the lower time frame, right? Now, okay, I'm just going down the 4-hour chart now, and I'm seeing this over here. Oh, sorry, let me come down to here. Let me just remove some of my drawings. Okay, so price is going down, is going down, is going down, is going down. How low can it go? Right? How low can it go? Right. So now the key thing is that if we see that there's so much bearishness, right? If we think that price is going to continue going lower, what do we do next? Right. The next key thing is to decide when would be the best time to sell. When would be the best time to sell? There is, however, one risk I notice over here is this little thing over here, is this little support line, right? This line is irritating because every time price comes down here, it bounces up. Comes down here, it bounces up. It comes down here, it bounces up. So this to me is a risk level, right? Price has bounced multiple times in the past on this level. So I would need prices, I'm afraid that price might bounce and continue to go up. So what I need to do is I need to use this as what we call a downside confirmation. Only when price breaks this level, right? If price breaks this level, then it might continue down further. Okay. If price breaks this level, then it will continue down further. So this is an important thing to note. You can find all the reasons why price might be bearish, right? Like a channel, bearish channel, bearish Ichimoku, bearish trend line, right? But you must wait. When it comes to trading, it's slightly different, right? Analysis is one thing, but once you have the analysis and you basically tell yourself, okay, man, Aussie dollar, AUD, USD looks really bearish, right? That means it looks like there's a lot of downside momentum. Once you have the idea in place, then you look for your trading opportunities. You try to put that idea into action, right? To put the idea into action, you need to know what is your entry. In this case, we can see that because this is a key level of support, we need prices to break this level to trigger the move down, right? So in this example, right, price needs to break this level. I'm going to call this sell entry. So price needs to break this level, and only once you break this level, then you can expect it to go down lower, right? How low can it go, right? It really depends, right? If prices goes lower, it might continue to respect the channel, right? I think that the channel, channel could continue down much further, right? So it could go even all the way down to maybe the next key support could be about here. We don't need to play the move too far. You could easily just play the move down to here, right? And you keep a very tight stop loss, right? That will make you a good enough risk to reward trade. Okay, yeah. So this is one example of using a high time frame to filter out some trading opportunities. I will continue to scroll through the different charts, but now there's another thing called correlation. Right, so Australian dollar and Kiwi dollar, what do you notice? I'm just moving between the two now. they are they tend to be very similar. They tend to move together, right? When one goes down, the other goes down. When one goes up, the other goes up. Now, let me teach you now the concept of correlation, okay? Correlation, so I'm going to click this plus button, AUD/USD, okay? And I'm going to put it on the same pane, right? And I'm going to change this to a line chart. What do you notice, right? I'm going to hide this Ichimoku. You notice that these two instruments, these two AUD/USD and NZD/USD, they tend to go down, go up, and go down, and go up, and go down, go up, go down, go up, go down, go up. They tend to go down and go up together. This means that they are positively correlated. So when one goes down, the other goes down. When one goes up, the other goes up. So based on this same theory, right? Based on this same theory, when one has a breakout, the other should also have a breakout, right? So in this example over here, right, we expect prices, right? You know, if price breaks this level, it should go down. If price breaks this level, Kiwi dollar has to break this level too, right? What I mean by that, right, is that this is the support level on Kiwi dollar. This level on Kiwi dollar is this level on Aussie dollar, right? If they both are broken at the same time, you get a very high chance that your breakout is going to be successful. But if they don't break out at the same time, one breaks out and the other one doesn't break out, then you know that there is something that is not, there's something that is wrong in the markets, right? That means there's a disturbance in the force, maybe, if that's what you call it. There's a disturbance in the force, right? It might be better for you to avoid that trade. So many times, I get questions asking, how do you avoid getting faked out of a trade, right? As in, like, how do you avoid false breakouts? A lot of us love to trade breakouts, but many times when we think that, imagine we're over here and we think that, okay, price has broken out. The moment price breaks out, we try to play the move down, but price then comes back up and then it stops us, it hits our stop loss. How do we avoid this happening, right? Because it's the more it happens, the more money we lose, which is not very nice, right? So one of the ways they can use to really avoid this from happening is what I call the correlation filter. Okay, so in this example, right, if this is the support level, then this will be broken. Once price has broken out from here, I would then look at our good friend Aussie dollar. If Aussie dollar, which we expect to break out from here, if it instead bounces up, right? So one is going up, in this case, one is going up, but one is going down. That means there's something wrong, right? That means this is likely going to be one of them is right. Basically, one of them is right, one of them is wrong, right? It's a false breakout. We would avoid trading this because we have a lower probability of succeeding. Right, we have a lower probability of succeeding because the markets are not moving in tandem with each other. However, if Kiwi dollar breaks out and then I go to Aussie dollar and it also happens to be breaking out like a bearish breakout, and then I know that the market is singing from the same hymn book, right? Both of them are moving in tandem, both are moving together, and that means that I have a higher probability chance of being correct. Okay, I hope that this concept of correlation helps you understand how to avoid getting caught in false breakouts. I do want to encourage you guys that if you have questions, right, you want me to look at a certain currency pair, you want me to look at a certain instrument, right, or you have a certain style of trading which you want me to give my feedback on, please just send it in the chat section and I'll do my best to look at them. Okay. Otherwise, yeah, we're just going to continue to scroll through. Oh man, this trade worked out so great, right? Yeah, this trade worked out so great. How I got into this trade, right? Let me see if I have an example on when I made this. I made the call of this trade live. Let me see over here. And I'm going to explain to you how I got it, and so maybe it gives you an idea, right? So this was made by me on the 28th of June, right? So I did an analysis on the 28th of June. I'm going to mute this. And the idea with the analysis is that on the 28th of June, we are calling for price to drop from here down to this take profit level. Look at the risk to reward. The risk to reward is like 1:1, 2, 3, 4, 5 or something. It's a great risk to reward setup. Okay. Now, how did I make this? How did I make this trade? Right. Clearly, we can see that the trade has worked out very nicely. Drop and is about at our take profit. Right. But how did I make this trade? Let me show you. When I was looking at this strategy, right, I'm going to do a bar replay. I think the market was about here. Okay. One thing I noticed, right? One thing I noticed is that I scroll back and I noticed that prices was dropping, lower and lower and lower and lower and lower. It was dropping lower and lower, right? So in this example, right, there is a very strong bearish. There's a lot of bearishness that's pushing prices down. Okay. At the same time, I was scrolling back and looking for support, right? It is clear to me that there is a very nice little support over here, right? Price bounce off it once, right? You can see price bounce off it once, and then it bounce off it again, right? So in terms of my take profit, if you notice, I don't play my take profit further than this level, right? The reason for that is because with such a strong key support level over here, it will be foolish for me to try to play my take profit all the way down, because price, this is clearly a big level of support. It is unlikely that price is able to break this and go all the way down. That's why we only play it to the highest degree of certainty, right? In this case, I'm very certain that price might go down to there, but you ask me whether I'm very confident that price will break out from there and go even lower. I can tell you that I'm not confident of that, which is why we need to play it safe, right? So in this example, I played down here. Now, how did I get this trade then? Right? What I did was, when I look at the chart, I threw up my Ichimoku, right? I noticed that price has been respecting Ichimoku very nicely, right? You can see it takes, it go down. Below, it go down. It tests it, it go down. It tests it, it go down. Test it, it go down. Go down. It tests it, it go down. Now it's over here again. It's testing it. So you will tend to notice that there's this certain pattern with Ichimoku. If you notice that the recent price movements have obeyed Ichimoku very well, like it has been testing it and it has been behaving well based on Ichimoku, then you can use Ichimoku. When is a bad time to use Ichimoku? Rather, a bad time to use Ichimoku is when prices are ranging. Right, so maybe give me an example when it's ranging, like here. This is when it is ranging, and it's a terrible time to use Ichimoku, right? It goes up, goes below, it goes above, it goes below, it goes above, it goes back above, right? It goes back below, it goes back above, it goes back below. So in this example, right, Ichimoku is not that great, right? Ichimoku has a lot of what's the word for it? There's just way too much noise, and you want to stay away from Ichimoku. You want to stick to Ichimoku in moments like this, right, where there's a clear trend, right? To trade using Ichimoku. Okay. So anyway, back to the latest drawing that we have over here. How did we manage to call euro dollar? How do you manage to call this drop on euro dollar so perfectly, right? Quite simply put, after I've established that Ichimoku is pushing prices down, I then look at chart patterns, right? One of my favorite chart patterns is the channel, right? So I notice that the channel is also suggesting that prices will continue to drop more, right? Because it has been reversing, and it's testing this level over here. So I got the channel, I got the Ichimoku. Two reasons why price might be dropping, might continue dropping. And then I look at the resistance level. We have a very nice overlap resistance over here, right? Overlap resistance, you look at the past webinars we did for IronFX, it will explain to you what is this overlap resistance. It's a very good way to find reversals. Okay, overlap resistance is my third point why price might be dropping nicely. Okay, so these 3 points add up together, we figured price might drop. But how far can it drop? How far can it drop, right? In our example over here, you can see that we only call it to the recent swing low. So in trading, it's important for you to know exactly where is your take profit. There must, a lot of people tend to focus just on the entry, right? A lot of people focus on getting this entry. Once they get the entry, they randomly put a take profit, they randomly put a stop loss, right? Which is a shame, right? Because the take profit and stop loss levels are as important as the entry. Let me repeat that again. Your take profit and your stop loss levels are as important as your entry. Okay, so in this case, once you establish the entry, you need to spend an equal amount of time to decide where your take profit is going to be, right? Don't just throw your take profit to any random level. So a lot of what's the word for that? A lot of forums out there, maybe on Baby Pips or these Instagram traders, they just give you a very simple trading strategy. They say that, okay, when you see a trading pattern, give yourself 50 pips stop loss and 50 pips take profit. Okay, let's see what will happen if we did something like that. Okay, I'm going to remove this. Oh, not 50. Let's do like 500 or something. So we have a short order over here. So bam, this is your trade, and you put your take profit. Let's just say you put your take profit at 500. No, at 300. So you notice your take profit is, you look carefully, right? There's this number 307.4, right? 307.4 is 300 pips of profit. So sometimes when you look, these trading educators out there, right, they say just put your take profit at 300 pips or something, right? So the problem with that is that if you were to put your take profit at 300 pips, your take profit will be down here, okay? However, there's a key support level over here. Right? I'm going to put this as a support, which is green color, right? And this is your take profit. Let's not worry about our stop loss first, okay? Let's not worry about our stop loss. Let's look at take profit, okay? What happens is that price then drops down to here. And when it drops down to here, it touches this level and then it bounces up. That's the problem with having a take profit that is beyond a key level, right? Most of the time, it might cause you to miss your take profit. There's a rule that I want to say. Take profit is, you know what, I'm just going to write it out instead. Take profit before key level. Stop loss beyond key level. This is an important point that you guys need to know. I'm going to make it so big so that you guys can see it, right? Put your take profit before a key level and put your stop loss beyond a key level. That will give you that will instantly improve the hit rate of your trades, because in many situations like this, right, if you randomly put your take profit at 300 pips, like down here, what happens is that price will go down, okay? And when price goes down and it touches this key support level, it bounces up. And then you're wondering, oh man, is the market being is the market being manipulated, right? You're wondering, man, why did price bounce up from here? Is the market being manipulated? Why? How can it just avoid my take profit and just it just goes against my trade, and maybe goes all the way to stop you out, right? The reason is because of your take profit placement. There's a better way to put your take profit, and that is putting your take profit before any key level. Okay. The opposite is true, right? That means your stop loss should be beyond a key level, right? You should always put your stop loss beyond a key level to give it that bit of breathing space, right? Just so that you don't get stopped out when price goes to your key level. Okay. Important considerations. Now, we do still have a little bit more time, guys. I see quite a number of additional guys streaming in here in our trading strategy clinic. I'm open to taking your questions, right? So if you have a particular trading style or trading strategy that you want me to take a look at, or you want to share and I can give you my feedback on, let me know and I'll do my best to look at them. And also, if you have a instrument that you want me to look at, maybe euro dollar, pound dollar, or gold or Bitcoin, If there's a particular instrument you want me to take a look at, let me know too, and I'll do my best to get to it. All right. Now, okay, so this is on euro dollar. Let's see some of the other instruments around, right? Which one has, so when I'm looking at stuff like that, right? If I'm looking at stuff like on the 1-day chart and I see this, I know that there's almost nothing I can do to trade. It's so hard to trade this, right? Just price is just going up and up and up. So I tend to avoid it. Pound dollar, I like to zoom out, see if there's any key level which I'm missing. Not really, nothing nice on pound dollar. Swiss franc, nothing much too, right? So I would then scroll through the different charts, right? And I see if there's anything I'm missing, right? Interesting here. Interesting. Still waiting on a couple of key levels to be broken. This one maybe. Pound franc might have a trading opportunity. I'll be sharing with you guys in a bit what I think might happen with pound franc. Pound franc has idea. Okay, so this is really honestly what I do every day. I just scroll through the charts and I see if there's anything that jumps out at me right away. I go in, I go out, I just zoom in and zoom out, look at the key levels, and all right, maybe we have, oh man, this trade worked out so nicely. Okay. We got EuroCAD. Oh, EuroCAD looks interesting. Is there another big level it might drop to? Okay, so this is the thing I noticed about EuroCAD, right? It's another nice trading opportunity I'm seeing. Nice bit of bearish Ichimoku cloud that is holding prices down. So we have one reason why prices might go down. I like this. I like this little bit of a, price is going down, 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 down. It's going lower and lower and lower. Right, it's a very, very good sign for me that price is in a nice descending trend. The important thing that I need to do now is I need to look for a breakout. I can see that price broke bounce out, bounce twice, bounce 3 times. It might be bouncing a 4th time over here, but this is my key trigger level, right? This is my trigger level. I put it over here because if price is able to close below this level, I am pretty sure. All right, I'm pretty sure we're going for a free fall, right? So this is my sell entry. If price is able to close below this level, we might go into a free fall. Where would it free fall to? This is where I will zoom out, zoom, right? And I realized that, whoa, the only level it might free fall to next is probably over here. This is the next big free fall level, which if you look at it, man, it's a very, very good juicy trade if it works out nicely, right? So of course, in this example, our first need for prices to break below this level. Once it breaks, it should trigger a drop. It should trigger a big free fall all the way to this level. And this was the big level since April 2015. One big bounce. Price hasn't came back since, but this is clearly the big support level to watch out for. Okay. Now, I hope you guys found this session useful. If you have not joined the VIP room, please head over to IronFX, vip.ironfx.com, right? Register for a free account over there. As long as you have $250 in your IronFX account, right, you can send a screenshot over to me, right? You just need to click request access and send a screenshot over. If you have $250 in your IronFX account, you will get access to the VIP room where you can ask me questions. You can trade alongside me. You can ask me, you can see the trading ideas, the trading signals that we're going to put inside here, right? Many high probability setups that you can look at, and you can take your trading to the next level. But first you need an IronFX account with a minimum of $250 in it to get access to this. Okay, guys? If no one else has any questions, right? Thank you so much for staying with me throughout this entire webinar, right? Nice to see you back here, Natalia, right? Hope to see you in the VIP room. It's going to get a lot more active, right? Once we roll it out to out of this beta testing phase, right? It's going to be a lot more active, and there's going to be a lot more trading ideas that are being shared in there. Okay, I hope to see you in the VIP room. Thank you, Sahid. Yes, please, if you can, head over to the VIP room and you can practice your analysis there with me. right? We've got a strong team of prop traders, professional traders, trade for a living, right? And of course, you get access to the My Trading Ideas too. Okay. Thank you very much, Natalia. Thank you, Sahid. Thank you, the rest of you guys. We've got Javette, Simon, Merritt, Kelvin, right? Thank you, guys. Hope to see you around the VIP room. Take care. Stay safe, trade safe, and peace out, guys. Take care, everyone. Bye-bye.
Hello everyone, my name is Emily. We have previously discussed central banks and their role, but this time we will focus on the UK Central Bank. The Bank of England was founded as a private bank in the 1694 to act as a banker to the government. In the 1946, the government nationalized the Bank of England because of its importance to the UK economy, while in 1997 the government offered it independence in some areas to avoid interference and influence from party politics. The Bank of England is made up of 3 committees which make important policy decisions. We have the Monetary Policy Committee, the Financial Policy Committee, and the Prudential Regulation Committee. These are all chaired by the governor. They also include people from outside the Bank of England who have valuable knowledge or experience. They are called external committee members. The Monetary Policy Committee is made up of 9 members: the governor, the 3 deputy governors for monetary policy, financial stability, and markets and banking, a chief economist, and 4 external members appointed by the chancellor. The Monetary Policy Committee decides what monetary policy action to take and announces its policy decisions 8 times a year. The central bank uses 2 main monetary policy tools. It sets the interest rate that it charges banks to borrow money from them. This is the bank rate. It can also buy bonds to lower interest rates on savings and loans through the use of quantitative easing. Bank rate, also called the Bank of England base rate or just the interest rate, is the most important interest rate in the UK. The Monetary Policy Committee sets bank rate. One of the actions the monetary policy needs to take is to meet the target that the government sets for inflation, which is 2%. The current bank rate is 1.75%. Higher interest rates usually mean a stronger currency. The pound tends to strengthen whenever the Bank of England raises interest rates. However, the Bank of England's current task, like that of other major central banks around the world, is quite challenging as it needs to manage surging inflation and keep the economy from falling into recession. That's all for today, guys. Thank you so much for joining us. Stay tuned for next week. Bye-bye.